All right, let's get right into it. We're talking about the F1 student tax lifecycle, and believe me, this is an area where the details really matter. Whether you're an international student yourself or you advise them, getting this wrong can be costly. So we're going to decode the whole thing, step by step.
So here's our game plan. We'll start with the basics of alien tax residency, then unpack that 5-year exempt shield. After that, we'll hit the substantial presence test, the FICA tax cliff, and the mandatory Form 8843. And finally, we'll touch on what happens after those 5 years.
Okay, first up, Alien Tax Residency 101. Before we get into any of the F1 specifics, we have to lay the foundation. And that foundation is all about one thing, your tax residency status.
And this is the fork in the road, right? Are you a resident alien or a non-resident alien? It's a massive distinction. As a resident alien, you're taxed just like a U.S. citizen on your income from all over the world. But as a non-resident, the IRS can only touch your U.S. source income. It all comes down to the specific tests laid out in the Internal Revenue Code.
Now for the part that applies specifically to F1 students. For those first few years, you're protected by something called the Exempt Individual Shield. Let's dig into what that actually means under IRC Section 7701B5.
Okay, this is absolutely critical to understand. Exempt individual is what we call a term of art in tax law. It sounds like you're exempt from tax, right? Wrong. It does not mean you're exempt from paying income tax. All it means is that for a while, the days you spend in the U.S. are, well, they're invisible. They don't count towards a key test we'll talk about in a minute.
And this shield has an expiration date. It's not a suggestion, it's a hard 5-calendar-year limit. That's it. This is the built-in mechanism the tax code uses to eventually transition long-term students into the U.S. tax system as residents.
So what's a calendar year in the eyes of the IRS? It's simple. January 1 to December 31, period. But here's the thing. Any part of a calendar year, even one single day, counts as a full year for this rule. And this creates something we call the calendar year trap.
And this quote really says it all. Check this out. If an F1 student arrives in the United States on December 31, 2018, that single day of presence in 2018 constitutes year 1 of their 5-year exemption. 1 day. Just 1 day, and bam, you've burned an entire year of your shield.
Let's put this into perspective. Look at student A, who lands on New Year's Eve, December 31st, 2023. That single day makes 2023 their year 1. Their exemption ends on December 31st, 2027. Now look at student B, who arrives just 2 days later on January 2nd, 2024. Their year 1 is 2024, and their exemption runs all the way to the end of 2028. Just 2 days difference in arrival created a 1-year difference in their tax status. That is huge.
All right, so what happens when that 5-year shield just drops? Well, you fall right into something called the substantial presence test. This is that mathematical cliff we've been building up to.
Okay, here's the formula itself, straight out of the tax code. IRC Section 7701B3. It looks a little intimidating, I know. Basically, it takes all the days you were in the U.S. this year, adds 1/3 of the days from last year, and 1/6 of the days from the year before that. If that magic number hits 183 or more, congratulations, you're a resident alien for tax purposes.
So, let's run the numbers for a student in their 5th year. They could be here for all 365 days, but because they're an exempt individual, how many days count for the test? 0. Zilch. Nada. So the formula adds up to a big fat 0. You're well under 183 days, so you remain a non-resident alien.
But now, watch what happens in year 6. The clock strikes midnight on January 1st. The shield is gone. Let's say you're here all year again. Your current year days are 365. The prior years, year 5 and year 4, were exempt, so those still count as 0. What's the total? 365. That is way over the 183-day threshold. Boom. Just like that, you've become a resident alien. That's the cliff.
And what's the first thing that hits your wallet when you fall off that cliff? FICA taxes, Social Security and Medicare. This is often the most painful and immediate consequence.
We're talking about a combined 7.65%. That's 6.2% for Social Security, plus another 1.45% for Medicare. For a student working on CPT or OPT, that's a brand new, pretty hefty chunk taken right out of their paycheck.
Now, you might be thinking, wait, aren't students exempt from FICA? And this is where it gets tricky. There are two different paths to a FICA exemption. The first one, under IRC Section 3121B19, is for non-resident aliens on F, J, M, or Q visas. The moment you become a resident alien, that path is closed to you, gone. The second path, the student exemption, only applies to work you do for your own school while you're enrolled. So if you're on OPT working for some tech company, that exemption doesn't apply.
Okay, let's switch gears to the paperwork, because none of this exempt status stuff just happens automatically. It all hinges on one little form, Form 8843, and it is non-negotiable.
So who has to file this? Let's be crystal clear. Every F1 student, every F2 dependent. You have to file it for every single year that you're considered an exempt individual. And this is the part that trips everyone up. You have to file it even if you have 0 U.S. income. The dangerous myth out there is no income, no filing. That is 100% false. This form isn't about income, it's about claiming your non-resident status for the day count.
And what happens if you just don't file it? The penalty is brutal. The IRS can essentially say, you didn't claim your exemption, so you don't get it. They can deny you the right to exclude your days of presence, which could retroactively make you a resident alien for that year. Imagine the back taxes and penalties. It's a nightmare.
But what if you're past the 5 years and you know you're not planning on staying in the U.S.? Is there anywhere out? Well, there is one potential lifeline, but it's a tough one to grab. It's called the closer connection exception.
This exception, found in IRC Section 7701B5D, lets you argue to the IRS that even though you meet the substantial presence test, you should still be treated as a non-resident alien. But here's the catch. The burden of proof flips entirely onto you. You have to actively prove that you don't intend to live here permanently and that your real home is in another country.
And how do you prove it? The IRS uses a facts and circumstances test. They're going to look at everything. Where's your permanent home? Where's your family? Where's all your stuff? What country is on your driver's license? Where do you vote? They want to find your life's center of gravity. And let me be clear, making this claim is a significant audit flag. You better have your ducks in a row.
So that brings us to the final question, really. When you know that a single day can literally cost you an entire year of tax benefits, and that one single missed form can completely unravel your non-resident status, are you sure your F1 tax journey is on the right track? Because in this world, compliance isn't just about filing, it's about a forensic accounting of your time, your status, and your intent, and missteps are just too costly to ignore.